Morning all. We're just letting people come into the session at the moment. Thank you for joining on time. We'll give it a couple of minutes to let everyone else in, and we'll get on with the seminar then, or webinar then. Sorry. Just give it one more minute. Okay, there's a good number have already come in. So welcome everyone to the latest webinar by the Association for Rental Living, the ARL. As you may well know, this is something we do regularly on the basis of sharing best practice, really getting good content out there for our members to ensure they know what's coming, trends are coming to help their businesses. And today we're joined by two people from MRI Software. We've got Hugh George, Account Executive, and Jenny Matthews, Insights, PR and Content for Europe, Middle East and Africa. And we are looking forward to hearing from them on rental housing trends 2024. Just to set some context, data is definitely the most important currency we have in build to rent. Insights drive investment decisions, they drive operating decisions, and they drive customer experience. So what we're looking forward to here is hearing from Hugh and Jenny's views on the rental market and the trends over the course of their survey periods. This is the second survey, as I understand, that they've done. So please, I can encourage you to use the Q&A button at the bottom of the screen to ask any questions. We'll have plenty of time at the end for those questions. And just to clarify, we have at the end of the we are recording this, and the recording will be emailed out to you, and it will be available on the ARL website afterwards. So that's enough from me. I'll hand over to Jenny, who will start the presentation. Jenny, you're on mute.
That's the one fail. We obviously didn't go through that in the run through. So 1 second while I just share the screen. Can you see that? It's coming through now. So we will get started. And I'll let my colleague Hugh introduce himself.
Yeah, morning everybody. I'm Hugh George. I sit within the Investor Solutions team at MRI Software, essentially looking at operational platforms for owners and agents operating on behalf of asset managers, whether that be residential, commercial, mixed use. But my primary focus is on the customer interactions that stem from that. So essentially the portal usage to allow access to information and also to participate in operational processes where applicable.
Thanks, Hugh. I'm Jenny Matthews. I lead on the Insights, PR and Content for the EMEA region, and that covers all of the sectors that we work across, from retail, residential, social housing and commercial property. So today we're going to take a look at 3 key themes which emerged from our recent rental housing trends survey. These focused on renters' aspirations towards city living, the value of green initiatives for renters, especially if they're cost efficient, and finally, how tenants and landlords remain connected in today's digital world. We'll then close with an outlook for the remainder of 2024. Before we get started, let's have a quick look at the state of the rental market and the makeup of this report. As Graham said, this is the second survey we've run following its launch in 2022. And it paints a picture of the day-to-day reality, preferences and aspirations of UK renters. We received just over 3,000 responses, which highlighted that almost half of renters live in the city. This has risen since our 2022 survey and suggests that there's a growing preference for urban living, possibly driven by employment opportunities, conveniences in the city, and the lifestyle choices on offer. The fact that almost half of 18 to 24-year-olds live with parents or housemates indicates the ongoing challenges facing the younger generation when it comes to moving out. And that's probably influenced by factors including rising rental costs, the lack of financial savings, and economic uncertainties further impacting their situation. There's also a growing trend towards renters being self-sufficient on a digital level, with 60% of renters preferring this option when dealing with their landlord, as well as an overall growing trend towards digitalisation in property management. For landlords and property managers, embracing a digital communications platform isn't just about meeting tenant expectations, it also offers operational advantages. These tools can provide data and insights into tenant behaviour and preferences and help landlords to better understand and meet their tenants' needs. Also, digital communications can facilitate a much quicker turnaround when it comes to resolving issues, leading to stability when collecting rents. The key challenge of affordability and shortage of housing options remains high on the agenda, which isn't surprising given rising rents combined with the cost of living crisis. And today we're going to take a closer look at this. But before we do, let's set the scene. Renters responding to the survey were spread across all regions within the UK. However, the highest concentration were located in London, followed by the South East, and then the North West. As expected, the younger generation surveyed tend to still live with parents or with housemates. However, this changes from 25 upwards as more move to living arrangements with their spouse or with family and children. 32% of those surveyed stated their rent payments were between £400 to £600. However, these respondents were mainly based in northern parts of the UK, and as we move further down south, this changes to around £1,000 to £1,500. So what are renters paying on a monthly basis? This comes back to the north-south divide we saw in the previous slide, with lower rents more noticeable in the north compared to the south, and that's been well documented in many forms over the years. The north of England normally tend to have more affordable rental options, which are attractive to both tenants and investors. The cost of living generally tends to be lower in these areas, which is likely to contribute to that affordability of rents. But if we move south, the economic landscape shifts. With many more major business hubs operating in these areas and a limited supply of properties available, there's fierce competition within the rental market, which naturally drives up prices and the desire to live closely to amenities that provide cultural, educational, and economic benefits. The pandemic may well have influenced these trends, prompting many to reassess their living arrangements, with some choosing to relocate to the north to get more space for their money, yet still keeping remote jobs in the south. A win-win for the renter in this case. This trend may have led to a slight increase in rents in certain parts of the north, but overall, the north-south rental price gap remains large. We can see that UK renters prefer to live in houses, with 54% stating so in our most recent survey. But there are signs of a change when compared to our 2022 survey, which we'll come on to shortly. This is closely followed by almost 30% of renters living in a flat within a block of flats. So taking a deep dive into this, the rise in the demand for rental properties is notable with the ongoing housing shortage. As a result, many renters may well be finding themselves priced out of the market for houses and turning to flats as an affordable alternative. It's no surprise that houses are the most popular choice of property to live in, given the lifestyle changes and changing work patterns impacting rental choices. The rise of remote working means that many renters will look to prioritise living space and amenities which accommodate a home office, most commonly found in houses rather than flats. But the convenience and lower maintenance of flats is becoming increasingly attractive among renters, especially young professionals and those looking to live closer to the city where flats are more popular. And let's not forget the financial side. Rising living costs and economic uncertainties have also made flats much more desirable, with lower rental and utility costs compared to houses. This economic pressure may be pushing property developers to focus on building more high-density housing to meet the demand. Hugh, how does this align with the conversations you're having in the marketplace?
Yeah, there's certainly a diversification in terms of portfolios. We're seeing a lot of people now operating more than one asset type. So where typically you would have had developers looking at building city centre apartments, they're now looking at building, reasonable density housing as well. So yeah, there are very much shifting shifting development options being built to accommodate with this. So it pretty much mirrors what we're talking about in this survey.
Fantastic, thanks so much. Moving on to the first key theme highlighted in our survey, which is city living aspirations. Looking back at our 2022 survey, the most popular preferred location for renters was a village or rural community, which reflects aspirations as we came out of the pandemic and people potentially looked for a quieter life. 2 years on, and a reversal of that trend has been highlighted, with city locations emerging as the most popular choice of property location. This shift highlights a change in renters' preferences, which is likely to be driven by renters wanting the convenience of urban life and a rise in the return to office and social activities. At MRI Software, we carry out a consumer pulse survey every 6 months, and that allows us to keep on top of consumer trends and changing behaviours. And one of the key areas we monitor is the hybrid working aspect. So our recent survey in May revealed that 72% work at least part of the week outside of the home, which further supports that big shift to the city. Since 2022, the percentage of renters living in city centre environments increased from 39% to 45%, and renter preferences for cities increased from 25% to 33%. The number of renters stating that they prefer to live rurally decreased by more than half, from 27% to just 12%. And this suggests that the initial attraction to rural living at the height of the pandemic has now waned as people look for the opportunities presented in towns and cities. If we break this down by age, the great shift to city living was particularly noticeable for those aged 18 to 44, with an average of 42% stating so, compared to just 15% of 55 to 64s. And what this reveals is how different generations value the closeness to daily amenities, career opportunities, and social activities differently, with younger individuals more inclined to embrace city life. As mentioned a couple of slides back, 54% of respondents stated they currently live in a house, while 75% stated they'd prefer to live in one. However, this figure has declined from 2022, when it was 84% who prefer to live in a house, another indicator that renters' preferences are changing. And this could be reflective of the broader trends surrounding housing affordability, as well as lifestyle changes. Renters stating that they'd prefer to live in a maisonette or flat increased from 13% to 21%, while the percentage of renters stating they prefer to live in a multi-unit apartment complex doubled from 6% in 2022 to 12% in 2024. And this highlights a growing need for higher density living, possibly driven by economic factors, the desire to be close to the services offered by the city, and changes in the makeup of the household. Younger age groups were less likely to live in houses, with just 48% of those aged 25 to 34 renting houses, compared to 62% of 45 to 54s. Those aged 35 to 44 were most likely to prefer a house, while those under 35 and over 55 were most likely to state they prefer to live in a flat. And this links to the generational changes and the need to scale up or down accordingly as families grow or fly the nest. So it's key for agencies and landlords to monitor how these trends are evolving over time, with economic conditions, lifestyle choices, and demographic changes impacting them greatly. Renters are adapting to new realities, whether it's prioritising affordability and convenience in cities or looking for more space and stability in quieter locations. We're in a week where there could potentially be a change in government. There are clear concerns about the UK rental market, with affordability driving the agenda, followed by a lack of housing options. For the year to date, average rents paid to private landlords in the UK rose by 8.7%. And despite this slowing, it still remains significant when compared with the last decade. This election, housing policy has never been more important, and renters will be looking to the elected party to address these concerns. The affordability aspect is understandable given that rental prices are outpacing wage increases, but has this been worsened through insecure tenancies, the threat of no-fault evictions, short-term leases and regular rent increases, all of which we know can disrupt finances and stability within the household? Another reason why affordability is such a concern now could be due to many landlords deciding to take out mortgages on buy-to-let schemes when interest rates were low and sustainable. But fast forward to now, and interest rates are scarily high, putting far too much strain on these landlords. But for those wanting to get onto the property ladder, there are clear barriers to entry with finance amongst the top three. Housing prices rose more steeply than usual during the pandemic and then stabilised, even falling in some parts of the country. But latest signs indicate that this may be on the rise again. Mortgages today are also much more expensive. 2.5 years ago, an average 2-year fixed mortgage rate sat at just over 2%. Today, it's currently just under 6%, making monthly payments more than double what they would have been. Should Labour be appointed, their promise to build 1.5 million new homes in England over the next 5 years could be the answer to the shortage of housing, but the planning environment needs to enable this pledge to be achieved. The affordability aspect still needs addressing, and that's likely to come from the Bank of England. Interest rates currently sit at 5.25%, and we'll only know from August if these are going to drop, which could be the shake-up needed for those looking to buy a home. The Conservatives pledge to build homes, prioritising brownfield development and permanently waiving stamp duty for first-time buyers of properties costing up to £425,000. But I think it's fair to say that we need to see timelines. Without any concrete action, these difficulties could worsen. In the year to April, approvals for new homes fell by 13% according to the Home Builders Federation, and approvals for sites to be built on are running at levels even lower than that beyond the financial crisis. The next key theme emerging from the report was around sustainability. In general, renters consider environmental factors to be moderately important to them, with an average rating of 7 out of 10. There's a clear generational divide, with those under the age of 45 averaging a score of 7.3 compared to just 6.7 for older age groups. When asked about the green features they'd like to see in choosing their next rental property, renters preferred those that would drive cost efficiencies, with 27% stating they'd like renewable energy systems and 25% preferring properties with high efficiency insulation. The emphasis on these aspects over other sustainable features suggests that renters support these as they'll benefit financially in the long run. For property owners and developers, this insight can actually guide investment in green technologies, and that won't only appeal to renters, but also it's going to enhance the property value and marketability. These features scored higher than assigned parking in terms of amenities. However, with only 9% worried about sustainable materials and 8% preferring properties with planned longevity, it's clear that renters will only prioritise sustainability initiatives if they benefit financially. Integrating these features that also offer cost savings could be a key strategy for attracting and retaining renters, particularly among the younger demographics. For the sustainability agenda to gain more traction, green initiatives need to be positioned not only as environmentally responsible, but also financially beneficial. For landlords in England and Wales, this aligns to the proposed EPC changes that are in the pipeline. Currently, all private rental properties must have an EPC rating of E or above. With the proposed changes, these properties will need to have an EPC rating of C or above for new tenancies from the 31st of December 2025. and that will extend to all tenancies, existing and new, from the 31st of December 2028. The spending cap, which is the most you're expected to invest to improve a property's energy efficiency, could also increase to £10,000 by 2025. Now, if landlords fail to have the right EPC, they could actually end up facing fines of £30,000 per property from the end of 2025. I'm now going to hand you over to Hugh, who's going to look at the final theme of our report, which was digitalisation.
Thanks, Jenny.
Sorry, just trying to move on. There we go. Sorry.
Most tenants feel there's room for improvement with their landlord or property manager's current communication levels and capabilities, with only 33% of respondents stating that they're very happy with it and 17% actively unhappy with the level of communication they received, highlighting how hit and miss things are in this area. Despite relatively low uptake levels, renters who use resident portals for communication with their landlords are generally happier with the service they receive. So 33% portal users were very happy compared to 26% who did not use a portal. Overall satisfaction levels in communication were 50% among renters who used a resident portal. One of the key things flagged within this report are the satisfaction levels with and without portal functionality. Those using a portal recorded a much higher satisfaction level, which may well indicate its ease and convenience of use with everything in one place for both landlord and tenant. Legislative changes make resident engagement strategies mandatory in certain circumstances, coupled with a clear indication of customer preference for portals, would indicate that anybody operating without one is going to fall behind the curve. In principle, renters state they prefer digital communications, but in practice, telephone remains popular, and email or text is much preferred to digital portals. Only 1% currently receive communication via a portal, with only 2% sending messages this way, and 8% using a portal to report and track repairs. The higher use of phone and email communication likely highlights two things. Firstly, immediacy bias among tenants due to the generally substandard communication that they receive from a landlord or agent, speaking to someone or getting a reply to an email to confirm their request because of the lack of connected systems being used to manage their tenancy. Secondly, the slow adoption rate of the sector to take on an integrated tech stack that can automate communication and even bring the tenant into the workflows where required, for example, in maintenance requests or arrears chasing. The holistic approach to this connected ecosystem has significant wins on both sides of the equation here. Customer experience is very much set by the likes of Amazon when it comes to the immediacy of response or access to information. Having a portal that can display real-time balance information, copies of documentation, status of repairs, and reporting of new ones, and send live updates when the status of any of those things change is the standard people are used to outside of property management. They expect these things when managing their home, yet their expectations are not met at least 67% of the time, according to our survey. In terms of payments, bank transfer still remains the most popular choice. And while e-signature is the preferred method for signing important documents, 40% still prefer to do this in person, possibly highlighting another area where the lack of integration leads to a frustrating customer experience. Digging into maintenance issues, this is one of the most frustrating elements of renting for tenants and landlords or agents alike. It becomes clearer that portal technology has an important part to play. There's a clear preference for using a portal to report issues where one is available. However, the far greater use of email and phone would imply the experience tenants get when using a portal is suboptimal. This is likely down to the feeling that things logged via the portal disappear into the ether and nothing gets done. So having the portal integrated into the property management software to create the ticket, manage the job, and give those updates and transparency to see progress, and then automatically track feedback would greatly improve the customer experience and free up time property managers to spend on the phone or replying to emails. In an industry where margins are tight, that is striving for the greatest operational efficiency, I can't think of a greater time sink and therefore cost than using people to provide information when the technology exists to allow customer self-service. So just a couple of examples of that. The bottom bullet on this case study highlights the point about integrated operational platforms, customer portals benefiting both parties. The ROI at the top of 150% equates to approximately 3 full-time employees in terms of the expansion potential, versus the cost of the integrated platform they're using. And on the next one, the ROI achieved here, looking at how integrated platforms again bring forward that efficiency, equated to 10 employees over the first 6 years since deployment of the software stack that is being used here.
Thanks, Hugh. So I'm just going to close off with our outlook for the remainder of 2024. The impact of inflation and interest rates changes on the rental market will be an area of interest and could potentially influence future trends. In response to rising rents and economic uncertainties, the market and those operating within it are likely to place a greater emphasis on business intelligence tools for detailed analysis and trend monitoring in order for strategic decisions to be made and priorities to be adjusted accordingly. In this sector, data will be viewed a necessity with property managers and landlords, considering a greater investment in the tools and provide a granular view of portfolio trends. Alongside this, mergers and acquisitions could become prominent as more corporate agencies look to smaller niche agencies in order to expand their portfolios and market reach. Consolidation is anticipated across all fronts among operators as well as operational systems, which will ultimately lead towards integrated solutions for better efficiencies. Many operators who initially pursued fragmented routes will now look to streamline their operations with a single solution or ecosystem. To cater for varied market demands, operators will look to diversify their offering across different residential sectors, covering student housing, co-living, multifamily, as well as single-family properties. Regulatory changes, including the national trading standards, will mean that agencies, property managers, and landlords will need to provide greater transparency in the information and property listings they provide, and may well shape the future dynamics of the rental market. As the residential property market continues to navigate the post-pandemic landscape, adaptability, data-driven decision-making, and a focus on long-term sustainability will be crucial for stakeholders to thrive in this changing environment. So before we wrap up, we just wanted to highlight the next piece of research that we're actually conducting, and that's our Voice of the Property Manager survey. What this is going to help us understand is what are the biggest challenges you're facing at the moment and what trends are impacting you and your business. So your input into this important property industry research will drive actionable insights and greater successes for everybody that's working within the sector. The results from the survey will form the MRI Voice of Property Management Report 2024, which will be available in the next couple of months. And all respondents will receive a free copy of the report. So if you do want to take part, please scan the QR code here, or we'll make sure we are able to share a link with you after this session. Thank you for your time. Thank you for listening to myself and Hugh. Please do feel free to pre-register for a copy of the report, which will be launching in the next couple of weeks, which you can do so using this QR code. If you miss the QR code, we'll of course share a link with you. I'll pass back over to you, Graham. Thanks.
Thanks, Jenny, and thanks, Hugh, and thanks for sharing those insights. Again, if you please, those who are on the call, I encourage questions through the Q&A button. This is a unique opportunity to get feedback from Jenny and Hugh. I'll open up some questions though, please. So I note there's we see a preference for houses, and that matches. We've seen the increase in investment in build-to-rent, investment in single-family housing over the last couple of years. 42% investment in BTR was in single family last year, and so we're seeing that growth. Question around that is are there differences in data operation and views for single family housing rental to urban multifamily?
Yeah, I suppose in short, yes, there are differences. I mean, there are common challenges across both, but yeah, there are differences there. In terms of data is probably the biggest thing. You know, looking at the nature or the makeup of the households living within. You know, as the report shows, you're more likely to find families seeking, you know, housing rather than apartments. Does that bring a change in preference for amenities? You know, moving away from things like a gym in the city centre apartment building to a, you know, a recreation centre or a playground in a you know, in a housing setting. So yeah, there are differences in terms of data. You know, making sure that you've got a coherent data strategy. You understand, you know, what insights you're looking to get out of your portfolio is key. I mean, data's no good if you don't know what you're looking for. But then also having the ability to be able to visualize that data and have actionable insights that come out of it. Those would be probably the two biggest things I'd say about the data management.
Yeah, and I think if I read it right, you were saying that whilst there was a preference to housing, you thought that was actually reducing, and with certainly some demographics preferring now to look at urban living. Is that a trend you've seen?
Again, yes. I think looking at the difference in terms of when the first survey was conducted, you know, there was the flight out of town as soon as people were cooped up for too long in small city centre apartments. Looking for more space was a natural reaction to that. Having moved out of town and perhaps experienced a less than optimal sort of outcome when things did open back up, has naturally led to probably more the younger rather than the older demographic looking to move back towards town. Whether that's into a sort of a closer suburban house versus a city centre apartment, potentially needs a bit more digging into, but there's definitely been a trend moving back towards sort of large centres rather than out in the sticks.
Okay. Linking to that, I've got a question here from Bradley Stovall. Thank you, Bradley. About how significant is it for renters to have pet-friendly accommodation and pet-related amenities in multifamily? Is that something you've picked up?
It is actually. So one of the questions we asked is how highly do you rate the amenities? And one of the options we put in there was obviously having pet-friendly amenities within close distance, whether it was actually on the complex or within a couple of miles. And that's probably grown in significance compared to 2 years ago. We have got the data on that, so we'll probably be including that in the report as well, and we can share that with you, Bradley. But we all know that pet ownership has rocketed through the pandemic and beyond. I'm guilty of that myself, and you know, that's one of the things we're looking for as we look to move house, is what are the pet amenities like where we want to move to. So I think if that's the case for me, I'm sure it's going to be the case for many renters as well, and I think that's just going to become more and more prominent as people look to prioritize pet lifestyles as well as their own.
Okay, so I missed the end of that, Jenny. Sorry. Okay, thank you.
Sorry. Yeah.
Okay, thank you. In just moving on, in terms of you talked about green credentials and being a really important factor in decisions there. You mentioned there that it's the financial benefits that people are seeing. Just as a guide, just could you elaborate about how the importance to operators of promoting that within it's tough to sometimes get rent new tenants in, new residents, but how should operators be promoting their green credentials?
With financial aspect being prominent for renters, that's what they're going to be looking for. So for them to promote those credentials, they need to lead with the savings that can be achieved for the renters, and that's the biggest thing that they'll be looking for, especially with costs so tight at the moment. We know that energy bills have come down for the next 3 months at least, but as we get back into the winter period, people are going to be faced with higher bills again. So it's kind of what landlords need to do is promote what savings can be achieved with this new technology, with this new initiative that they're going to be placing within the property. Hugh, I don't know if there's any more that could be expanded on there.
No, I think that pretty much sums it up. I mean, there's the benefits of, say, a smart home versus one that's well insulated with energy efficient appliances is, driving that difference or driving that message is probably more important. Having a washing machine that connects to your Wi-Fi into an app so you can start it or stop it is far less of a priority than one that costs you 200 quid a year less to use, or X number of litres less to use to get clean clothing. So those, the financial benefit is the message that the tenants have told us is the most important message to hear for them.
Yeah, but going beyond that, how important also is the importance of a sustainability story, of having and not just energy saving, but using green energy and other green technologies, and also the sustainability story in terms of how the building is operated. Is that important?
I think it's important, yes, but I think the thing that will actually make a difference in terms of a renter choosing a development over another isn't necessarily the sustainability message. It's well, okay, great, that's good, but I want the one that's going to benefit my wallet. Clearly, in the build to rent and single family markets, that differentiation between the rest of the rental market about sustainability and the approach that this sector takes, we're very much giving the right message in that regard. If you actually want to attract a tenant, proving that the unit that they're going to take from you versus the one they're going to take from a competitor is going to impact them positively in the wallet, is probably going to be a key way to get them into to signing a tenancy with you versus another operator. And Graham might have frozen. Graham, you're back.
My back. Sorry, I think I dropped out there. Apologies for that. Yeah, my service provider needs to improve their broadband delivery, clearly. So thanks for that. Jenny, I think as you mentioned about how data can help with regulatory compliance. That was an interesting point I just wanted to pick up on. Could you expand a bit on that? Because that's obviously important to operators and investors.
Of course. So it's understanding, firstly, what is going on with your properties? How are you keeping a track of all of that information? And with all these new standards that are coming out as well, how are you demonstrating that your properties are compliant? So it's getting under the nitty-gritty of what data you've got available. It's understanding how your properties are operating, and then it's also understanding what tenants are doing as well within those properties. How are they interacting with you? How are they logging issues? Again, how are you keeping a track of all of that? So to have one system that manages all of that, that's the key thing, and that's what that one system will actually enable. It enables you to see all the data, all of the insights, all of the trends for your entire portfolio, your entire rental portfolio. That's why it's so important when we link it back to compliance and keeping on track, because you've got to be able to evidence exactly what you're doing and how you're doing that.
And that point about monitoring residents' usage and residents' behaviour, is that data you could use to aid in education of your residents as to how they are using energy?
Definitely an education piece. If you find that somebody isn't as clued up on the green features of their building, there's definitely a marketing campaign there for landlords, for property owners, to do a piece on, actually, did you know, are you getting the most out of your energy system? Are you getting the most out of these new technologies that we've implemented? So it's actually a win-win for both, because it's an education piece to drive the technologies that you've invested in, drive usage of those technologies, but then it's also a win-win for the tenant as well, because they get the most out of it. So definitely agree with that. Yeah.
Okay, I think we've got either you've answered all everything. There's no questions because you covered everything so brilliantly, or we've got a very shy audience. But I'm going to be moving to close otherwise. But please, I encourage any other questions. Please bring them forward. I just wanted to clarify also the audience who you surveyed, because obviously this is renters. How broad is that in terms of renters? Did it cover the private rental sector as well as built to rent?
That's a good question. We will have to take that one away and just have a look into it. But I believe it is a mix of the two.
Yeah, I understand it is as well. There was, some, sort of high street rentals, high street lettings versus build to rent and single family. I don't know exactly what the split is in terms of number of respondents. Obviously, it was an anonymous survey, so quite difficult to exactly pinpoint that difference. But certainly for future surveys, getting that as a question to identify, which sector of the market they come from would be a useful insight.
Yeah, what led me to ask that was the questions or the number of people who were using portals, for example, and apps, which seemed relatively low in build to rent world, and maybe was influenced by the number of private renters or PRS sector.
Possibly, there is a growth of certainly from obviously what I'm seeing, with that being the sector I sell to effectively. I'm certainly seeing greater interest from your typical high street lettings agent into taking portals in. What they're looking to achieve is perhaps slightly different in terms of things like the community building elements to portals, and resident engagement. In build to rent is clearly much higher than it is in high street lettings. They're looking for minimum void, maximum rent, greatest return for their landlord, and greatest fee for themselves, and that's pretty much where it stops until the next time they need to let it. So it is a little bit more transactional in terms of the requirements that they look for, but the challenge from a payment, from a documentation, and from a maintenance perspective still remains the same. And they still need to be able to self-serve, or the customer wants to self-serve to a degree, but also from an operational perspective, getting people away from phone and email again just saves that time and money. So yeah, it's absolutely a priority for them, perhaps just for different reasons.
Okay. I've got a question here, which actually was going to be my closing question as well. So thanks for preempting me, whoever that one was. But based on the feedback you've received, what is the one thing that operators can do to improve resident experience?
I'll go first.
Okay.
The one thing that you can do is invest in the data and invest in the insights. By listening to your tenants, by listening to your renters, that's the only way you'll be able to drive change. Without those insights, without that knowledge, they don't get the best experience, and you're still navigating in the dark. So I think that's probably my key takeaway, is to invest in that, to really understand who your tenants are. And I've found that across every sector that I've worked in, like across MRI software, it's about understanding your customer, whether it's in retail, whether it's in social housing. It's understanding who you are talking to, who you're servicing, in order for the best experience to be delivered.
So listen to the data, basically.
Yes, absolutely.
Okay.
From me, it would be all around value, which obviously is different from cost. Different customer profiles are going to be looking for different outcomes, but ultimately feeling like they are valued themselves as a customer is step one, and also getting value from the service that's being provided. If you're not delivering value, people vote with their feet. They'll go somewhere else. And basically understanding your business proposition versus the markets, to understand how you're differentiating yourselves and what your value proposition is, I think is a critical thing. And then making sure that you've got the systems in place to be able to deliver that, to be able to extract value yourselves. I mean, we're all here for, we're not here for charity. At the end of the day, it's a money-making enterprise that we've all entered into, but delivering value to the customer is the key to realizing that.
Yeah. Okay. You mentioned, Jenny, the research you're doing with operators, and building managers. And I think, just to confirm, the deadline for that has been extended to the 12th of July. Is that right?
The 14th of July, I believe.
14th.
So
okay,
yes, yeah,
that makes sense. So what we'll certainly do is after this, once the recording's ready, we will circulate this webinar as a recording, and obviously everyone can see the slides again by that way. But we'll also confirm the links to access and participate in that, because I think that's the next step of getting the operator's view on the future, which you can then compare with the residents' view. So thank you. I'm not seeing any more questions, and I've run out now. So I'll draw this to a close. Just for reference, with the ARL, we continue to do webinars and events. I'll point yourself to next week, next Tuesday on the 9th. We've got a webinar which is focused on B Corp, entitled "To Be or Not Be Corp: and the Impact on the BTR Sector." So that's going to really focus on a number of case studies of people who've gone down the B Corp route and why they've done that, and how that's impacting their work in the BTR sector. We then have a study tour in Manchester on the 16th and 17th of July. That's going to be a cracking tour of 8 sites in Manchester. Good variety of sites where you can really learn a huge amount about how Build-to-Rent is operating behind the scenes, as well as the marketing story. And equally, we've got another study tour happening on just one day on the 19th of September in Milton Keynes, which will give you a very different insight in a different type of market, which is very fast growing. And I encourage you to sign up for those too. Thank you, Jenny. Thank you, Hugh, for your insights and participation. Thank you to everyone who's logged in and stayed with us. Look forward to seeing you all again very soon. Many thanks.
Thanks, Graham.